Mine's loading.
13-year-old phone. Uh, hey, anyways, all right.
Yeah.
What's up, y'all? Hey, it's Coach Cam, your friendly neighborhood coach. We are back here, Financial Friday, 3 o'clock. Sorry, we're 1 minute late, but it's all right. Technical difficulties, but it's all good. Lo and behold, I got a whiteboard now, so it's about to get super real on you guys now. As always, I am with my brothers from another mothers, and we are here to bring the knowledge for you guys so that you can be more inclined to be prepared for your financial future. Anyways, what's good, y'all?
What's going on,
Up, man?
Cam?
Loving it, man. Fridays, we're ready to get into it. Lots of exciting information to be presented today, man. Hey, G, by the way, black is your color, G. Black is your color. Hey, Cam, too. I see that. I see you guys.
I know.
Okay.
So this is a dark blue cardigan. I was like, oh, I got.
Oh, excuse me. Excuse
but
me.
it's okay. It's okay. It's
I'm sorry.
slimming. I like it. I like it
It
nonetheless.
is slimming. It is slimming.
And it's got
You look
pockets.
Sorry, guys. Yeah, if you can tell, we have fun. Go ahead, man.
That's how we do. You good? So today's big conversation, though, is gonna be the Fed, buddy. A lot of big changes. Glenn, but real quick, were we able to verify? Are we good on Instagram?
We're good on Instagram.
Bet. Does it look good? Is it straight?
It looks the same. Yep.
All right, bet. All right. So, anyways, we're gonna get to it, y'all. First article. So first of all, how was you guys' day? How was your week?
It's been a productive week.
Go ahead, G.
Go ahead, man.
I was just gonna say my week has been phenomenal, super productive, man. Always good to realize, with so much that's happening inside of the economy and so much that's happening in the world, it's always good to just take a second, step back, be appreciative of what you have. So I'm super grateful, man. I have the attitude of gratitude this week. That's what I'll say. Grateful for you two gentlemen as well.
Oh man, look at you. You smiled more today than I see that. For those of you that know where you go, y'all get the good side. We get the mean side.
Yes.
So,
it's been definitely grateful for this week, man. A lot of navigating through a lot of stuff, but nonetheless, it's extremely grateful to be present on this call so we can connect with the community for a bit.
Oh, bet. So appreciate y'all. And this week's been good for me, man. It's been a lot of running around, been able to help a lot of families do a lot of things as far as providing knowledge for folks. I was just telling Glenn, I got to start capitalizing on all the things in my brain because I just did a call with a buddy of mine who was like, "Hey man, teach me about podcasting." And I was like, "Hey, you gonna make money off these?" He's like, "Oh yeah, I'm on like $1,000 a month retainer." And I was like, "Damn." So for all y'all that call me, time's about to get expensive. But anyways, so our first article today is stock market news live updates from Yahoo. You all know how we love Yahoo because honestly, it is a very non-partial environment to talk about the news, especially in the financial market. Stocks higher, S&P 500, NASDAQ notch big weekly gains. All right. But one of the big things that they talk about in this article is how the banks are doing thus far and some of the changes that we are seeing with them. So, gentlemen, what do y'all have for this?
Actually, I want to hear you go first, man, because, we talked about the selections, and Cam, you're the man. This is your selection, man, so you get to go first. Go ahead.
Oh, okay, thanks, buddy. So as you guys know, some of the biggest banks that we're looking at in general, you're talking about JP Morgan, you're talking about Bank of America, Wells Fargo. I'm not the biggest fan of them, but so be it. A lot of people are. But we're looking at how they're doing thus far and the earnings that they have posted. Okay. So JP Morgan, so right here it says JP Morgan posted better than expected fourth quarter earnings as CEO Jamie Dimon said the U.S. economy remains strong. U.S. economies, getting better. We're going to talk in the next article about kind of the inflation numbers and the changes.
Can I poke in? Can I poke in?
Now you want to poke in. Okay. I knew he couldn't wait.
I'm quiet. Go ahead.
No, what you got?
I was gonna say what I was gonna say is that I've always respected Jamie Dimon because he's been at this for probably about a year and a half, and he's been taking lashes for what he's been saying about the economy.
Mhm.
but I sense a little. I won't say it just seems a little bit of double talk here
Oh yeah.
from him, saying that the economy is strong. Like it's strong when your fourth quarter comes out higher than what you expected, right? So
Oh,
it's
fact.
strong now, right? But so a little bit of double talk from Jamie there, but I'm not upset with him because he has been the one CEO in the banking sector that has been honest, that said, "Hey,
Yeah.
man, this is getting crazy." This so a little bit of double talk there, but I guess he earned that. He has some brownie points that he could use. So
Yeah.
yeah.
I mean, he has been more vocal one, so it was like you said, it was a little like contrary to what we're normally used to hearing from him. Because normally he's the one that's like, I don't know why you guys are saying the economy's getting better because the economy's trash right now, and
Yep.
you guys,
Yep.
I don't know where you guys are living in fairy tale land. And I think I even saw an interview where he was talking about, you know, we know how analysts like to look at the stocks, and they'll pick whatever trend they think is going to be the best for that day. And he straight up called it out. He was like, I like how y'all pick the trends that you think are going to look good today. He's like, show me this trend. And then, the commercial break.
Exactly. Exactly.
What you got, Big Glenn?
Yeah, so it's funny. As I read through that article, the word that stood out to me that kept going was just inflation, inflation,
Yeah.
inflation, inflation, inflation. And I know we're going to talk about that here in a second, but like that was when I read that and then read the second one, I was just like, this is very interesting.
Yeah.
Right? A lot of everything that's going on in the world. You know, you talk about Jerome Powell. One of the sentences that stood out to me was the Fed from Jerome Powell was the central bank to take action, even if it's not popular, right?
Mhm.
Making that decision, right? Making those decisions that impact so many people. But on the other side of that, I get it. Like as a leader, as someone in a leadership position, you have to make sometimes those decisions when they are unpopular. So that was something that stood out. And then the last part of it too, I don't want to kind of jump ahead, but something else that stood out to me was the crypto piece, right? I know we have a lot of crypto listeners.
Look at Glenn.
Yeah. So it was funny, we talk about numbers, how crypto, rose 3%, right?
Yeah.
And so generally we've been seeing for months and months and months and months that crypto's down, it's down, it's down, it's down. And then it being up 3%, and basically this is actually the second consecutive month.
Mhm.
Right? And so yeah, man, a lot of good information in this article, but like I said, I definitely want to dive into that inflation piece here in a
So as good
Three
as
top
crypto's
banks.
doing, it didn't stop crypto.com from laying off all them people.
Yes.
though.
Yeah, right.
Exactly.
Like 20%.
Yeah.
And look
Oh
at
yeah.
the
They
three.
grip.
And look at the three top banks, right? Look at your numbers here.
I
This
was
is
gonna say,
like
okay.
we dive deeper. Look at this. So you got Bank of America, you got Wells.
Yeah.
Wells not as much, right? They had some losses, but Bank of
I'd say that.
America and Chase, right?
Mhm.
Their numbers came in better than expected. Right, and they're in the billions, right? So this is what we're talking about here. Versus, look at BlackRock. BlackRock profit dropped 23%, right?
Yep.
Goldman Sachs. So what is that telling you? This is telling you that hard money, right?
Yep.
The usual suspects are people that you walk into a brick and mortar, give them your check, or give them your dollars. They're
Mhm.
on the rise, right? Or they stay at that same place because why? Because that's what you trust. That's what the brain goes
Mhm.
to be comfortable with, right? But
Yep.
BlackRock and Goldman Sachs, who were more with BlackRock, they lost a whole bunch of money off of their ESGs, off those ESGs, right? And people
Yeah.
were not feeling the environmental. That's neither here nor there. That's choices. Goldman Sachs invested a lot of money, and they're losing money off the platform, right? Off the digital platform as they try to go
Yep.
more fintech. So what you
Yep.
start to see is that the people that are heavy into the stocks and the investment corridors, right there, they took big losses. But the
Yeah.
stability of just hard money, stable hard money banks, it continues to gain money, right? Because why? People were pulling money out of those stocks and putting them into the banks. So they're posting profits and they're able to invest and do what they need. They do what they need to do because stable money is the play right
Mhm.
now, cash and stable money. So that's what
Yeah.
I really saw that. And not to mention Tesla, God, another 5%.
I was like, is he gonna
man.
do it? Is he gonna do it?
Come on, man. Come on. Ah, he's killing me. He's killing me.
Yeah, man.
I'm not gonna lie, he's killing you, but I'm loving being able to get it at these lovely prices.
Well, it's because I bought it when it was high, man. It was,
Uh,
$300, 300 something bucks.
I got a buddy who's been in it since almost the gate. He sold it while it was down, and he was still 1,000% return.
Wow.
Jeez.
Yeah, but bro, I'm telling you. And if y'all stick with us, we got some developments that are coming that might help you also be in that situation.
Agreed.
But moving on. But anyway, so like Rico said, that is something, the mind will take you to what you've been taught is safe. I don't want to say what is safe. I'm going to tell you what you're taught is safe. And that's because even though your money's sitting in the bank where, FDIC insured, things of that nature, do not forget about inflation. Just because you don't see the number coming directly from the bank doesn't mean the economy as a whole is not affecting your money. And those are the things that you have to keep in mind when it comes to where is your money sitting at, getting you, 100th of a point percentage wise, because they're still losing money. You let your money sit in a bank account for 3 years.
Wait, Cam, break that down. Break that down with the digits. Tell them the digits, how it breaks out with the digits, because you gave it to them the fancy way.
What do you mean?
Write it up there for them. Right. Show them what that percentage point is. Please show them.
All right. So
what it looks like.
Let's look. You gotta tell me if you can see it, because I think the light might be messing up. But we'll see.
No, it's a glare on the top right, but you're good right there in the middle.
Okay. Right here?
Yeah.
Okay.
Yep.
So what I just said was most of y'all are getting 0.001. Most of y'all. The average for the nation is actually 0.006. So that means for every dollar that you have in your bank account, that's all you're getting of it. You're getting a sixth of a penny. And here's the thing: is sometimes this money it's not a monthly thing. There are some banks who actually do it quarterly. Mm-hmm. Depending on what bank whatever bank you're with. So for every dollar you have in your bank account, you're getting a sixth of a penny, but every single year your money gets worth 3% less. And we're going to talk about why I put 3% in our next article. And so that means over the span of 3 years, this dollar is now worth only 91 cents.
That is correct.
Hey Cam, I want to add this because I see with a lot of people, and when I'm sitting down with them and I ask them about, we start having a conversation as far as like interest rate with your bank account. Mm-hmm. Almost 85% of the people don't know what their rate is, right? And so if you guys, if you're watching this live or replaying this live, number one, I want to challenge you to take a look at your actual and see what your interest rate is, right? Look at your bank account, see what your interest rate is, because like Cam mentioned, some people think their interest rate is, they're getting monthly, when in all actuality is actually quarterly. So I challenge each and every one of you guys to do that, right? And so I wanted to add
to this article. I challenge you, after you do that, I challenge you to actually understand that, guess what? Even when you got those 3 pennies at the end of the year, you're getting taxed on that. That's called a capital gain.
Yep. And you getting taxed on the 3 pennies.
Go ahead, Cam. We're rolling to the next one.
And we're going to the next one. And you're getting taxed on your 3 pennies. All right. So hold on. Let me pull it up. Stop sharing. All right. So article number dos.
I'm glad we started doing this for the people, man.
I'm telling you, bro. So you guys will start seeing me. I actually just signed on to do financial boot camps and workshops with this company that does certifications for veterans. Awesome. And so I'm becoming a mentor for them. But that's why, and when I talked to the CEO, she was like, "We are not educated on this stuff," and so. I love doing this with y'all because I feel like it's just so needed in every community, honestly. So second article we got for you today, and that's why I wrote up here 3%, 2%. I'm not sure if you can see it because of the glare, but I got you. But it says for the Fed, 3% is the new 2% when it comes to new 20. Inflation. Yeah, 30 is the new 20. I know Glenn felt that when he was like in his 47. He's like, oh,
you're looking like 22.
40 is the new 20.
Yeah, yes. Loving it.
He's limber though. You won't beat him in a foot race. I didn't hear that. I did hear that about G. He fast. I was like, all right, man.
Still got the will.
So
3%, you 2%.
I got you. So the what this article spoke about mainly was the downtrend in prices, as a whole per se. Like, yes, the interest increases that you guys are seeing from the Fed, they are working in retrospect, because what they do is they cause, loans and all types of things. It makes people spend less money in a sense so that we can bring it back in, like the dollar's worth more, right? However, the problem with how bad inflation got is, as most people know, the law of averages, right? If you average a higher number for an extended amount of time, guess what happens to that lower average? That starts to come up as well, because now there's no longer an average of 1.5% to 2.5%. It's now averaging up to 3% based off the economy, right? So Rico, Glenn, what you guys got?
Yeah.
I think that for me, right, the fact that getting people to understand how difficult it would be to get it back to 2%. And just what you stated, right? From us, like, you would have to literally devastate the economy. And I think that a bigger problem that people don't really realize is the fact that it's not just inflation that we're dealing with, it's stagflation, because it's not just the inflation that's in the United States. China's starting to open back up. Russia has its embargoes against it, right? Ukraine produces so much of our raw commodities and all of these things. There's all this stuff that's going on. So it's a stagflation, right? Which does what? It extends the inflation. Now you're not going up or down. You just stay at the same. And so we kind of plateaued. And the Fed, that's why they're so aggressive. So I feel like, just like what they're saying, you saw in the article, you got to see Wall Street is literally telling them, guys, you're never going to get it back down to 2. We need to just settle for 3. 3 is going to put us where we need to be. We're seeing some positive upturn from the pressure. So the Fed, what they're doing is working. And shouts out to Jerome Powell. He gets a bad rep. And people, because he does, man. And people talk crap about him, but the guy's intelligent. You're sitting there, you see what he's doing, it's working, right? But I have to agree with everybody and say that 3% is definitely the new 2. Stick to 3. Right, where you thought that before, where it was 2% to 4% inflation. So when you got to 4, you were like, "Oh crap, this is crazy." Now that's going to shift to 5. Right, and so that's what I believe, and I see all of Wall Street saying the same thing. I think we're in for another year. I'll say 9 months to a year of down. This is just me, right? 9 months to a year of just a down cycle. You can't avoid it, right? They have to depress this economy in order to get us back to where we need to be. Now, question, or on the backside, I'm gonna give this to G. But the thing to look at is how long until the trillions that we printed bites us in the butt, because that's where we're at now. But you haven't fully seen that yet, right? Because in 2008 we didn't overprint, right? We just dealt with what we were dealing with. We bailed out a little bit, but we outdid that by like 4 or 5 times this time. So it remains to be seen where that comes into play. Go ahead.
I think at some point, we're definitely going to feel that, and it's unfortunate, based off of the decisions that were made to print more money and that the amount of money that was printed in that first span of time, right? And so, diving into the inflation piece of it, like going back to that first article to connect this one here, it stood out because while the inflation has slowed down for the 6th straight month, right now they're saying that we're at 6.5%. Last July it was at a 9.1, and then slowly from June, and then July it slowed down a little bit to 8.5, then 8.3, 8.1, 7.7, and then 7.1 from last month or the previous month. And so yes, I agree. I think that is going to continue. The Feds are going to continue to work aggressively to actually hone in on this. But again, like Rico had mentioned, the stagnation, like this is impacting globally. This isn't just a U.S. based thing, right? We talk about U.S. inflation, but it's really a lot of parties that are involved in this decision or in these decisions that need to be made. And then speaking of just U.S. alone, in the article it mentioned how 3 million workers short of pre-COVID, right? That was by Wall Street, right? So just the amount of people in August that last March that walked away from their jobs, and then the August prior to that, it was a lot of people who stepped away from their jobs. So
Yeah.
this is impacting globally, not
Yeah.
just nationally.
Oh, for sure. And I mean, and what people, I think a lot of people don't understand necessarily how the CPI works either, the Consumer Price Index, right? Because one of the things that is going to keep inflation at that 3% too is now that things have risen, there are certain industries that are not going to go back down.
Right.
They're gonna stay that high, and it's not like, oh, we go high for a couple months, everything's like levels out, everything goes back. No, there are industries now when it comes to how much they are charging for the prices of plane tickets, prices, fuel, how much they have given to employees now because they hired them during the pandemic. All those things cost money, and because of how much more it costs the companies, they're not going to like lower their prices out of the goodness of their heart so that things can go back to normal. They now have to, it was almost in a sense like a loan. They have to make sure they're making those payments now. And so their prices will remain that high. So like energy, we always talk about that. Energy will not, the prices will, they'll go down a little bit, but they're not going to go back to what they were.
Exactly.
I agree.
And I think on that note, people don't realize the chain, right? So previous to, I was doing finances as well, but previous to just diving deeper into finances, only doing finances, right? I'm a chemical engineer, I was a chemical process engineer. So I'm telling where I'm going with this. So I was making fertilizer, right? So I see the fertilizer prices. So the raw materials that make that fertilizer, that's passed down all the way to the food consumers. I don't know if you guys realize that, but that fertilizer goes on your beans. That fertilizer goes on your almonds, goes on your, right? It goes on the hay that feeds the cows, the alfalfa, like all these different things, right? So it's passed down throughout the system. And so as that's going up, the food continues to go up. If you go to the grocery store, you'll see it. But these prices are, and then it's connected with socioeconomically as well, because the war in Ukraine has a big part to play in fertilizer prices. Urea is a product that they make there solely, right? Not solely, but they're a huge producer of this.
Yeah.
But you got to look at how all these things are connected, because people don't connect the dots, right? They're just like, man, food's high. This is stupid.
Chicken's so expensive.
That's what they're like, man, this is dumb. Right? Why is milk? Man, this is stupid. Man, there's some chickens over there. I'll go get these eggs, but they don't understand the whole entire ramifications of why things are higher, right? So it's just digging deeper into, and that's another reason why I'm a commodities guy and why I look at those raw materials, and you notice what those do, and then literally 3 to 6 months later, you see it throughout the rest of the market. Yeah. So, all good.
Yeah, you pay attention to the building blocks of the things that we buy. Yeah. What you got, G?
I talked on it. I talked on it already. I'm ready to go to the next one. We got 7 minutes.
We only had 2.
Oh my bad. I read the Golden Sacks.
Unless you know what? Unless wait, we got 6 minutes. Unless you got something you want to speak on, G, and then me and Rico hop in. What's something maybe
pull that Goldman Sachs. That's what he wants.
What you want?
Yeah. So I thought the Goldman Sachs was the
pull the Goldman Sachs up. That's what he wants. That was just for information, but I know that's what he wants.
Oh, okay. Hold on.
G is a big GS guy. G is a big. He's a big Goldman Sachs guy.
I thought I sent 3. My bad. You know why it was? For some reason, that was the one, because Jeremiah has a Android. It didn't pop up as an article in my thing, and so it didn't work. But I'm gonna pull it up. Don't worry, I got you. Don't worry, we got you, Rico. We'll change everything around for you, bro.
Hey, let me say this because we have 6 minutes, man. I want to say this to our viewers, man. So again, we started this for the sole purpose of providing value to folks, right? And to kind of keep everyone educated in the information, because there's a lot of, it's not talked about enough in many communities, right? And so what we're doing is wanting to bridge that gap and educate folks. So as you're watching this, as you're replaying to watch this, if you have questions, you guys want to hear more clarity and what we're talking about, put in the chat or put in the comment section, and we love to connect and share the information. So I get the opportunity to be surrounded by 2 phenomenal guys, man, Cam and Rico, when it comes to talking about finances. So we just scratching the surface and getting, or not even scratching the surface and getting started. We're going in the direction that we're moving. So, with that said, GS Goldman Sachs.
Right, drop it on them, G.
So real quick, so Goldman Sachs, it says Goldman Sachs Platform Solutions business lost $3 billion in nearly 3 years. Initially, I was just like, I put myself in their shoes, like, man, like, where would my mental be at if I lost $3 billion in 3 years? that was my mental thought. I just seen the title. And for those that don't know what Goldman Sachs is, I do want to share this. And if you go to the article, you can just read it. But Goldman Sachs Group Incorporated lost $3.03 billion in nearly 3 years on its platform solution business that houses. So this is what Goldman Sachs is. It houses transaction banking, credit cards, and financial technology businesses, right? And so, with that, one of the main things that kind of I was kind of interested in, because there was someone that was in the leadership group, or one that leads the group, stepped down. Right. I read that in the article that I think his name was Swati, or their name was Swati Bahati, stepped down. And it talked about how with Goldman Sachs, them kind of scaling back a little bit. Right. When I read that, I was just like, if you're losing that amount of money 3 years in a row, you do need to scale back on some things. Right. And so it made sense that them to reanalyze what's going on. I mean, obviously it doesn't talk about the meat and potatoes of what's going on, why they lost it, but I know that their operational expenses were outweighing what they were bringing in. Right. And so, but I want to ask you guys, companies, businesses like Goldman Sachs losing that amount of money, how do you guys feel it affects or impacts the United States? Whether it's stocks, whether it's on the financial side.
Well, let's just talk about, first and foremost, they tried to cover it up. They tried to fix it, right? If you notice in that article, they rolled another Marcus, what they said, right, Marcus? They rolled it into that platform. It wasn't originally in the platform. They lost $2 billion, and they said, ooh, we got to ease this. We'll roll something into this sector that's making money, so the numbers look better. And it still didn't do right. So that's something to take notice of. I'm sure that was the guy that stepped down. That was his idea. So when that happened, he said, okay, I'm keeping it all the way 100, right? That was his idea.
Yeah.
It didn't work. So they told him, we're going to kick you out or you leave. Right. And so that was the choice that he had. And so he stepped down. But when you have these type of businesses like Goldman Sachs is a pillar in the United States economy. And it's something that's kind of tends to tell you where the financer or where the financial sector of the United States is headed, right? BlackRock as well. So when you see these numbers and these losses, the United States is in trouble. What it means is that we're in trouble, right? Because this is the pillar. This is a bank that people, the Lehman Brothers before their demise, right? But they used to be back in the day. This is one of the people that you look and say, okay, this is how the American economy is doing. So that's what it says to me. When you see that you've lost $3 billion, you don't have the answer to it, which means you don't have an answer to what's going on in America. You can't change it, right? You're looking, you see the stocks, and people start to feel a loss of confidence. And when that loss of confidence comes, that's when they start pulling out money from your stock, and that's what you're seeing. And no matter what ideas or what you do to bring, try to raise the interest and try to raise, capital and get that money back up, you're not going to do it because the people have lost confidence. That's what I see.
Yeah. Yep. Well, you know what the big play was? It was partnering with Apple for that Apple Card.
It was.
Yep. And they don't say it specifically, but that is probably what the direct to consumer business model was. Potentially. That was part of it. But anyways, we are at time, ladies and gentlemen. We
still got a minute. I want to talk about that because Cam's always trying to shove Apple down my face. So here's one thing I will say. Apple's the largest company in the world, right? That's where they're at. Biggest cap, right? Okay. Now, Apple, people just buy Apple. But what I want to connect that to with this Goldman Sachs, with the 30 seconds that we have left real quick, is to say that Apple couldn't save them. What does that tell you about Goldman Sachs? What about the condition that they're in? What does that say? I'll leave it at that.
Hmm.
I mean, you're not wrong. I do stuff. I've actually jumped in between Apple and Android before just because I'm like, man. I use it for easeability, I'll be honest. But that being said, I mean, you're not wrong. It's if you got with the powerhouse like that and they weren't able to save you, then what's going to happen? What's going to happen now that those partnerships aren't there anymore?
Yeah.
Exactly.
So who are they gonna run to? Are they gonna call Ghostbusters? Like who they gonna call?
Right.
So
Somebody.
for a tidbit of knowledge as we jump off, I didn't know that the owner of Louis Vuitton is the richest man in the world. Boom.
Arnold. Yep.
Yeah.
That 188 that Elon lost
Yeah.
being dumb with Twitter, that didn't help. Idiot.
Yeah. I was excited. I was looking forward to talking about that last week.
Oh, buddy. But
good.
anyway, y'all, hey, we appreciate y'all. Financial Fridays, we come at you every Friday, 3 o'clock Pacific Standard Time. We're here to talk about, the news for the week, give some education. As Glenn said earlier, please let us know if there's anything you think is important to talk about, or if you have a question about anything that we did talk about. Other than that, like, share, love, comment. We'll see y'all later.
Appreciate you guys.
Appreciate it.